Guys, welcome back to We Talk Money and welcome to Bitcoin Spot ETF Approval Day.
Woo!
Let's go.
Let's go.
Okay.
It finally happened.
Man, what a drama-filled week. So much speculation, so much FUD, so much bullshit. And finally, it looks like it's happening. Who knows? The SEC could rug us again, but yesterday it looks like their Twitter account got hacked and they prematurely released the approval, or somebody snuck in there and did it for them. Who knows? Who cares? As of today, it looks like the ETFs, all 11 of them, are approved and ready to go. So guys, what does this mean for anybody that's like, okay, what's the big deal? I know we've been writing about the ETFs in the Daily Doe over the past few months and talking about it in some prior shows, but why does this matter? What's the big deal?
Well, we talked about this all the way back in 2017 when no one believed that there would be traditional institutional investor interest in crypto and in Bitcoin specifically. In fact, there were so many Bitcoin doubters back then, way more haters back then even than now. And we said, it's going to happen. We think it's going to happen. We think institutional investors are actually going to move into this asset class. I think we even did a video on your channel, Chris, back in 2017 when we were in Bali. And we said, you know, the one major driver of the crypto asset class, one absolutely massive driver, could be allocations from institutional investors and institutional investor acceptance of crypto and Bitcoin. And here we are. Here we are. It actually took maybe even a little less time than I thought back then. I thought maybe about a decade or so. So we're a little bit ahead of schedule. But it's a big deal. It's a big deal because we've got trillions of dollars that could potentially flow into this asset class now over time, now that you have the stamp of approval from the SEC and from major investing firms, BlackRock, Fidelity, ARK, et cetera, et cetera. Pretty big deal.
I had a feeling. I had a feeling when BlackRock got involved, shit was going to get done. I just had a feeling.
So, Nikki, you're a CFP and you talk to a lot of financial advisors and a lot of people in TradFi, or traditional finance, and the old school legacy system. What do you think is going to happen? Is this going to bring in a rush of investor and capital, or, you know, is it going to be a slow burn? What are your predictions for this now that it's actually real?
I think it's going to take time. I think it's going to take time for, you know, big companies like BlackRock and, you know, these big investment firms to teach the advisors, because believe it or not, you know, the BlackRocks of the world put on educational content for advisors all the time, you know, to try to promote different things that they offer for advisors. So I think that process is going to begin, and the education for advisors on Bitcoin ETFs and how they can, you know, help with risk-adjusted returns, and just speaking about the asset in general and how it's had the best performance over time. Advisors will eventually start to take note as that education continues. But there is a segment of the advisor population that is probably ripping, roaring, and ready to go to put these ETFs in investor portfolios. They just haven't had, you know, they've had GBTC, which Travis has traded and talked about very, very often. But they wanted a spot, you know, they had the futures ETF, but they wanted a spot Bitcoin ETF. And so now they have it. So I think that there will be a percentage of advisors moving in and buying it up pretty much right away. Will the allocations be large in relation to portfolio allocations? I don't think so. I think the crypto allocations will probably stay pretty small because advisors have a lot of responsibility and a lot of liability. So they'll have to keep that in mind for their fiduciary duty and risk taking. But this is an exciting time. I mean, this is giving advisors more access. Before, it was literally they couldn't do anything. They couldn't manage this for people that maybe wanted exposure, but they didn't want to deal with opening another account at Coinbase and the unsure, you know, people are very unsure about how all of that works, even though it's simple to us. To many everyday investors that just have their accounts at Fidelity, it's complicated to them and they don't want to deal with it. So they're going to wash their hands until something like this comes along where they can easily buy it, or their advisor can buy it boom, it's great. They get an allocation and they're happy. So I'm pretty excited about it. I think it's going to be good for the industry overall, assuming that Bitcoin continues its adoption, with the masses.
Yeah.
Yeah.
I mean, I know we've been saying for the past couple of years, like at some point it's going to become irresponsible for investors not to suggest Bitcoin as a part of the portfolio, right? Like advisors that have a fiduciary responsibility to their clients, if they are anti-Bitcoin, how much evidence do you need that this is and has been the best performing asset for over a decade now? So yeah, I don't know. I'm excited about it. And I think the big thing that people are looking at as a historical comparison is, we've talked about this a lot, the gold chart and what happened in the early 2000s when the gold ETFs got approved and what happened after that. And so that's, I guess, kind of the bull case, and what people are expecting to happen is, this capital that will come in over time through retirement accounts and things like that. But one of the biggest questions, so I just sent a tweet asking people what questions they had, and a couple of the more common questions were about, like the difference between a spot ETF and a futures ETF, or just different derivatives, right? And are they going to be backed by real Bitcoin? And will this be verifiable that these companies actually hold the Bitcoin? What do you guys think? Is this going to be something where it's actually backed by real assets, or is it a paper play? Is it safe? Is it unsafe? I think those are some of the most common questions I'm seeing right now.
Yeah. And to mention a few things, I think that, that these bring to the table that weren't on the table before, you've obviously got the sponsorship from the major firms. That's new. You did have some smaller products from Grayscale and from BITO and things like that. Some of the futures-based ETFs or products. GBTC was not an ETF, by the way. So you've got the sponsorship from more traditional organizations that offer these 401k and retirement plans like Fidelity and BlackRock, et cetera. So you have that connection. You have 401k accounts and retirement type accounts that could potentially now invest in these types of funds. And then you also have lower fees than the existing products. I mean, GBTC was at somewhere between a 2 to 4% annual fee. It was a stated 2% of the net asset value, but because it was trading at such a big discount to its net asset value last year, the effective fee was actually closer to 4%, which is kind of wild.
Mm-hmm.
These ETFs will have fees as low as I think 0.25%. So you've got lower fees, you've got sponsorship from the traditional investment houses, and then you also have the ability to arbitrage away any massive discount to net asset value, which is a big deal because, GBTC, again, it traded at almost a 50% discount to its net asset value, which is an additional risk on top of the crypto asset itself, which is, as we know, can be pretty volatile. So now the ETF creation redemption mechanism allows them to eliminate a massive discount to net asset value. So that reduces one of the key risks of a product like GBTC. So all of these things, and I'm sure that there are a few other benefits as well, but all of these things are really opening up a broader market, particularly for advisors like Nikki's talked about, particularly for individuals that can't really have flexibility in certain types of accounts to get access to crypto products until now.
But they are actually backed by Bitcoin. I mean, what happens is basically Bitcoin is
the custodians
Coinbase is the custodian.
Yeah, they hold Bitcoin, and they get the orders from the redemption and creation orders from the investment
authorized
firms.
Participants.
That's right.
Yeah.
Yep.
Yeah. The JP Morgans of the world basically buy the Bitcoin and deliver the Bitcoin to the ETF provider. And so it does say in the actual prospectus, I looked at the BlackRock prospectus, that it is backed by actual Bitcoin custodianed by Coinbase.
Yep. Yep.
Yeah, I'll pull up an image here that shows who the custodians are and how these different things are going to work. My internet's going a little bit slow here, but
and one of the things while you're pulling that up, I did want to mention as well is that, it doesn't matter as much to me, the price action that we see, or even the flows that we see on day 1, day 2, day 3, or even in the first week here. What will be really interesting to me, and I think what the true impact will actually be from these vehicles is, what do the flows look like on an ongoing basis, 2 months from now, 3 months from now, 6 months from now, a year from now? Is it going to be a meaningful percentage of crypto trading volume? I think it could be. And so that's where I think, while a lot of people are focused on this 1-day price action, which we should talk about, I think it's going to be really interesting to watch how these things affect flows just generally. Like you showed, the GLD ETF had quite a large increase in flows in price after GLD was opened up to the market. So maybe we can see something similar.
Yeah, well said. And here's a snapshot showing all 11 ETFs that are approved and the different custodians, right? So like Coinbase, Fidelity, Gemini, and BitGo are kind of the main actual custodians of the Bitcoin. And Trav, do you want to explain some of the other details here, like the fees and the exchanges? And for anybody who's not familiar with the way that equities actually trade, a lot of people in the crypto space, they understand, spot Bitcoin buying and selling through either centralized exchanges or DeFi. But this is a little bit different because you're going through like the NASDAQ or the New York Stock Exchange. You want to, I guess, kind of just explain some of the basics of how that works and how it's different from regular spot crypto trading?
Yeah, so the ETF product itself is the vehicle that you're actually trading in public markets on an exchange. So if you go into your broker, if you go into Charles Schwab or Fidelity or Interactive Brokers and you buy, say, the BlackRock crypto ETF, then, or the Bitcoin ETF, then what you'll be doing is actually buying that product from BlackRock, and then they're going to basically throughout the day accumulate the buy and sell orders and decide that the adjustments that they need to make to the underlying assets themselves. And so they'll then go to the custodian, Coinbase in many cases, or JP Morgan, and say, we've got net X amount of orders for the day that we need to make a change to the underlying assets. And so the custodian, they will deliver those, and the custodian itself will go and actually release or make changes to the underlying asset. The custodians like Coinbase and JP Morgan are basically there to ensure that the wallets that hold Bitcoin are secure and to make sure that, that things are basically there when they need them to be there. And so that's where the asset protection comes into play. And then the ETF providers themselves are actually providing the vehicles that will be publicly traded on exchange. So you won't be able to buy those really unless stock markets are open. So that is one drawback. Whereas, in the traditional crypto asset class, you've got 24/7 trading. And you can, trade through decentralized exchanges. You can trade, one-to-one. You could trade through, exchanges like Coinbase or, whatever else. So that will be one major difference, is the ETFs will probably have more gaps in price as well because of that. So there'll be, market hours for trading those ETFs. But yeah, there's some trade-offs there, obviously, because they don't trade 24/7, because they're only trading during stock market hours. Those will be some differences. But yeah, you basically are going to be able to purchase or sell those ETFs just through a normal stock brokerage account. So that would be nice.
So basically, if you have a stock account, you just go in and you type in one of these tickers like BITB or HODL. I like that one. And yeah, you buy it and sell it just like a stock. And, let's just talk about, I guess, like the different hats or beliefs that we can have about this. I see a lot of conspiracy theories floating around and people saying that maybe this is not good for decentralization. And is it really good for Bitcoin? There's pros and cons to everything. And on one side, you've got, the hardcore Bitcoin maxis that, say that maybe this isn't the best thing. I don't agree with that. I think the more capital and the more access that people have to Bitcoin, as long as, there is not an easy way for manipulation. But I think the more diversification in ways to actually purchase is better. Back in the day when it was like one or two centralized exchanges, Bitcoin was very easily manipulated. And that's why the volume was so much higher in the earlier market cycles. And something that people have gotten wrong, I think, about centralized crypto exchanges like Coinbase and Binance and stuff is they've looked at them as like stock brokerage accounts, which is where people typically hold their stocks, right? Is in a brokerage account, either in a retirement account or a cash account. But really what centralized exchanges are for is just an on-ramp. It is not a safe place to hold your Bitcoin or ETH or whatever crypto. It's just an on-ramp and an off-ramp. It's a place to buy and it's a place to sell if you need to liquidate. But to treat them as like holding places has been very dangerous, as we've seen with all the hacks and shit like FTX, right? But for people that don't want to deal with cold storage and that want to own in retirement accounts and just not have to deal with private keys, I do think for your average mom and pop investor, like this ETF is a great way to get exposure to Bitcoin. What do you guys think?
Yeah, I agree 1,000%. I think that um I can only, I guess I'm only seeing this as a positive because it legitimizes the asset. And that's been one of the biggest hangups people have had is they don't trust it. They don't think it's legitimate. They can't justify the value of it. You know, all of those arguments. And it's like having these large investment firms come in and be a part of this and give more access to more people. I don't know. I guess I'm seeing that as a positive for the space overall. If people want to trust an ETF, you know, you got people that want to custody their own Bitcoin, but if people don't, you know, what is that harming anybody really? I mean, it's just the risk they're taking on more than anything. But Bitcoin is still being purchased to fulfill this demand for these ETF shares if the demand is actually there. So I guess that's how I'm viewing it is it doesn't matter. It's
It
good.
could theoretically tampen down volatility a bit, which,
Right.
you know, if you're an active trader might not be the best thing for you if you're used to, you know, taking those 30-40% bloody dips as trading opportunities as you do, Chris, as many of our community members have done. It's
Yeah.
Could
possible
change.
that volatility
I
will be dampened, but we don't know yet. We
yeah.
actually don't know.
I think that's the expectation, right? As the market matures, as it becomes more and more liquid, like that's kind of the idea is that, you know, you don't get 30% washouts in a day, which is okay. I mean, there's still going to be other trading opportunities. But some of the other questions we were getting is like, how will this affect the 4-year market cycle, you know, with the halving? And that's a completely different market dynamic, right? All a spot ETF does is give access to other to people that haven't been able to buy it or not willing to take on that risk. But that doesn't change the halving cycle, right? Like every 4 years, we're still going to have these halvings, and we've got one coming up in late April. And so I think the more and more people that understand that there's less and less Bitcoin, almost all the a massive percentage of the Bitcoins are already out there. So there's not much left that's coming into the supply. And as people pull them off of centralized exchanges and as these massive custodians suck up whatever supply is available out there, I mean, this could be a very much, you know, reflexive trade or like a melt up scenario where there's a supply shock. And I think prices could get really ridiculous if there's a FOMO panic buying because people realize, hey, this really is a finite asset. And if people are hoarding it, I think we're going to see more like FOMO rushes to accumulate whatever we can.
Yeah,
But
I actually agree with that. I think that that's something that we need to be considering, especially as more capital is going to be coming in to eat up the Bitcoin. You know, that's where the supply and demand dynamic could really get interesting. I mean, this is why people invest in Bitcoin to begin with, right? Is because it has a finite supply. So now we have to just wait and see what that does, and if true economics really work here, so to speak, right?
Yep. You know, it's actually interesting today. I'm just looking at price action. We can start to jump into some of the charts, but funny enough, you know, Bitcoin's been basically flat on the day. It was red to kind of start, but if we're looking here at the daily Bitcoin chart, The big question was, okay, is this going to be a sell on the news or a buy on the news? And so far, Bitcoin on Monday, Bitcoin broke out and got up around that 48K resistance level, and had a little bit of a pullback retesting 44K. But what's interesting is Bitcoin's not even the biggest gainer today. ETH and some other layer twos are actually the ones that have been breaking out in anticipation of maybe a spot ETH ETF in the future, right? So I think now that Bitcoin's been approved, the big question is, and I think this is the challenge for the SEC, is like, okay, which assets do you approve? Which ones do you give their own spot ETF? Because man, I mean, how many shitty scam coins are out there that the founders are now going to be knocking down the SEC's door trying to get an ETF? This is something that we could probably dedicate a whole other show to, but I think that is the big question now is, okay, Bitcoin's been approved. Who else gets to join the party?
Dogecoin ETF?
I saw one that I think doesn't get approved yesterday. It was the, I can't even say it, but it was the F Gary Gensler coin. There's a scam coin that was, like the F word Gary Gensler coin. I don't know if that one's getting approved.
Doubtful.
Oh man.
Oh
yeah, but it is funny, like, to think about, okay, like
here we go.
aside from the SEC's Twitter account getting hacked and everybody trolling Gary, they put out these tweets saying, hey, make sure you have 2FA on your accounts, and they didn't even have 2FA on their own Twitter account. I mean, like, you can't make some of this shit up.
How can we even believe, after reading the tweet, knowing it got approved today, how can we believe that they got hacked now? Like, to me, it feels like an employee just sent a tweet too early and then they had to like cover it up or something. That's what a tinfoil hat, sure.
I thought maybe for a second Elon was trolling and Elon was using his like super user powers. But the account was like liking, weird stuff, and so it looked like there was somebody who had control for some amount of time who was not an official SEC person, but
maybe a rogue employee.
I mean, yesterday was just one of the funniest. I mean, maybe it wasn't funny for everybody if he had a massive trading position on, but to me, it was just one of the funniest things I've seen in markets in a while.
Yeah.
And then the SEC tweeted like in October, the best place to get real information is from the SEC themselves.
Yeah.
It's just been drama.
Oh,
just
man.
Crazy.
It's too good. 2024 in markets.
Yeah, like, there's never a dull day in crypto. Like, there's times where the markets can get slow, but there's always something going on. And that's why I love this space, man. It's just, it's truly just shaking things up and like making the old guard look really foolish in different ways. I love it.
How many F-bombs do you think Gary Gensler has thrown out over the past 48 hours is the question.
Yeah.
Him and Jay Powell have had, a time.
I want to see Elizabeth Warren's face today.
Oh man, I wish we had cameras in those rooms. I wish we could see a live feed of Gensler yesterday or Elizabeth Warren today. Yeah, I mean, it's just to be a fly on the wall in those rooms, man.
Yep. Well, let's see. So ETH showing big moves, Bitcoin going from red to green on the day. It's always impossible to like predict how markets are going to react to big events like this. So I usually don't trade around big scheduled events like this. But what the price action is showing us is that we are still in bull market structure. Like, there hasn't been like a big sell on the news event. It's been just a little dip to support, and then buyers held up the 44K support zone. So I don't know. We'll see, when these things actually start trading, how does that relationship between the spot ETF chart and then the spot, just Bitcoin chart, what's the relationship there? And is there a flood of capital? Is there a big washout? Like, I'm going to be watching over the next few days when these things start trading to see if there's any kind of clear understanding of how capital's flowing. But for right now, it almost kind of looks like a non-event on the chart.
Yeah, that makes sense. These things really haven't started to get any flows yet as of today. I do think it's going to be really interesting to see, what happens outside of stock market hours versus what happens inside of stock market hours. That's going to give us a really interesting insight into the effects of ETFs that maybe we haven't had before. I mean, sure, we've got like stock futures and stock ETFs and stock futures trade outside of, some of the hours that the market's closed, but we actually have a true 24/7 global trading market where we're going to be able to see if, there's different trading patterns versus what we see in stock market hours. I don't know. I'm just kind of interested to see that aspect and see if there are different mechanisms at play there.
And we have had the CME Bitcoin futures since 2017. And historically, most of the gaps have ended up getting closed. And with futures, you really only get gaps like on the weekend. And right now, we actually have a few really large gaps that are still open from the 2023 price action. And it just looks like the market has just kind of left those behind. But whenever you're dealing with a stock, right, where it's closed from the afternoon and overnight, there's going to be a lot more gaps. So I'm going to be looking real closely over the next like 2 to 4 weeks to just try to see how those gaps are behaving. And there's going to be a little bit of a learning curve. So I'm going to be doing some classes in the wealth building community to talk about what I'm seeing and if there's anything that is clear where we can kind of find a trading edge or if it's still just kind of random. So that'll be kind of an interesting thing to dive into in the near future. Yep. But everybody today was like trying to click the link for the official SEC announcement. And I think the SEC's website was down. So I actually downloaded the PDF and then read through the whole thing and then used ChatGPT to kind of summarize some of the most important points. So I posted that in our Discord. So if you guys are not in that, go to wetalkmoney.com/community and you can get in our Discord channel. But what other questions or kind of common misconceptions or misunderstandings have you guys seen out there, or any other important points that you guys think people should know about this whole spot ETF situation?
I have an important point that I want everybody to just remember. I do think that I know that people can buy and trade, Bitcoin through Coinbase, and that's fine. But what's really kind of unfavorable about that is you're doing it in a taxable account in the US. And with these new ETFs, I think Bitcoin is still going to have volatility for the near future at least, right? So I think it's going to be really cool to be able to trade moves via these spot ETFs and capture, larger potential volatility and larger gains in a tax deferred account. So I personally am very excited about that as a trader. I also may, put a position in to get some tax deferred Bitcoin exposure. So I think that that's something a lot of people can think about as a positive, is taking advantage of the volatility in a tax deferred or tax advantaged, if you have Roth, manner. So that's just something that I wanted to point out. There's some strategy there that I think we're going to be able to really take advantage of with such a volatile asset like Bitcoin.
Nice. Yeah, that's a great point.
I mean, I know GBTC exists and, that's been the case there and you've been able to capture it there, but it's giving us, it's just giving us another vehicle to do it.
Yeah, GBTC is actually up, or it was up today, where market's closed as of right now. But Trav, any other points you think people need to know, either about just like how spot ETFs work or how you think this one's going to work, or important points?
I think we've covered most of the big ones. There are some questions still outstanding about GBTC's conversion to an ETF, and I actually need to look a little bit deeper into that. I know that I'm fairly certain that they're in that they're in that conversion process. And what that will mean is, they'll be able to not have a major discount to net asset value. They'll be able to arbitrage that away, which I think will be helpful. But, we have seen that gap close. I think last I looked, GBTC was trading at a 5 or 6% discount to its net asset value. So that will be, hopefully closer to zero, but it's mostly gone away from where it was 50% discount wise, just back in late 2022.
Yeah. Cool. All right. Well, we can make this a pretty quick show and get this out to everybody. There's something else that actually happened today that I thought was pretty cool that I wanted to bring out. So OpenAI is launching their GPT store, where basically, anybody can create custom GPTs, and you can actually earn income if people use your custom GPT. So I thought this was pretty cool. It's like a rev share thing. So they're launching this, I think, throughout the day or maybe over the next couple of days. I noticed I didn't have access as of an hour ago, but I think this is really cool. I've been building different custom GPTs to help me in different areas of my life and business. And I think, just seeing what other people are building is going to be just awesome. So I'm stoked for this.
AI.
Yeah.
We'll be talking about it a lot this year. We'll be talking about it a lot. Nvidia, man, you should pull up a chart of Nvidia, by the way. It's
are my shares pumping?
Oh, they're pumping. They're pumping. The AI theme is alive and well.
Ooh, and a gap aftermarket. Yeah, what's the latest here?
I mean, Nvidia is just on a tear. I haven't seen any company-specific news in the last couple of days, but from just a pure price action perspective, it's been breaking out, and one of the strongest tech large caps right now to start the year for 2024. For me, I think it's really tough here because I think it could be like a $700-ish stock this year. But, I'd rather buy it at 400 or 350, because 700 is pretty fully, more than fully valued, to be honest. It's, trading at a very high multiple at that level today at, 570, whatever, closed out, actually closer to 540. It's kind of in that, no man's land for me. It's like not quite cheap enough to get conviction to buy, but, I still think it's probably got a little bit more juice to squeeze. So, but I think, ultimately, it's going to be interesting to see the Q1 earnings or Q4 earnings reporting, I guess, which starts this Friday. We've got the big banks kicking off on Friday. They'll be giving their earnings reports for Q4. And then we'll start to get a lot of those big tech companies rolling in and reporting their Q4 earnings like next week and week after. So Nvidia reports a little bit more off cycle, but it will be interesting to see, if we're seeing a follow through of that heavy demand that we saw last year for chips, and, if we're still going to see that same action this year with, a shortage of supply. So, yeah.
Yep. Well said. I mean, the stock market got kind of a scary start, right? Like right off of the open of the year, we had a few red days in a row, but over the last couple of days this week, we've had a little bit of a bounce, and we're kind of right up there hovering around those all-time highs. So, earnings season will be huge. Are there any other economic data you guys are looking at, or anything on the macro side? I think, what do we have? Core
big inflation report.
Inflation. Yeah.
CPI.
Yep.
CPI and PPI. So it's quite a busy week, actually, even outside of crypto. Crypto's had, center stage, but even on the stock side, it's a very busy week. We've got the CPI report tomorrow, PPI on Friday. We've got the bank earnings on Friday, and there's a lot happening. So
bank earnings,
it's a fun time to be in the markets.
I think bank earnings are going to be really important because everybody's been worried about the, Q4 holiday season shopping just not being as good, and worried about, recession. And so it's hopefully we'll get some insight into, how balance sheets are looking for consumers, delinquency rates and things like that on credit cards. And I think it'll be a really important sequence of earnings to pay attention to.
Yeah. Awesome. All right. Well, anything else you think people should be thinking about or looking at this week? I'll go first. Price action is king. There's a lot of noise. There's a lot of bullshit out there right now. If you get overwhelmed with opinions or with just, stuff coming at you. Simplify, sit back, look at the big picture, look at the charts, ask how the markets could cause people pain, right? How they could shake out, and have a plan no matter what the markets do. I'm still pretty heavily long in crypto, and looking for bull market setups through the halving. So I think that this year and 2025 are going to be really fun years, and there's a lot of excitement right now, but I am more than willing to buy any massive washouts if we get any stop runs or panics or anything like that. So that's what I'm looking at. And obviously on the macro side, in our Discord channel, we're going to be talking about any big news announcements with inflation or any surprises there that could throw a wrench into things. But yeah, anything else you guys want to say or you think people should be thinking about?
Just putting the puzzle pieces together, like that's kind of what we're having to do now, is take earnings puzzle pieces, take economic data puzzle pieces, and try to figure out how we're going to go, and if we're going to need to worry about recession this year or not, if we're going to need to lower earnings expectations, which would affect S&P valuations. So just putting all of the puzzle pieces together so that we can make informed and educated investing and trading decisions, basically.
Yeah.
TD?
Yeah, I mean, make hay while the sun shines, as they say. We're in a bull market, so this is the time to be profiting and taking good trades. And be careful, of course, that obviously like keep track of your risk management, especially when things get into extreme greed territory and you see certain stocks, if they go far beyond where they should be, think about trimming. But overall, I mean, it's a good environment to be in, to be looking for new trades, to be looking for setups. And I think there will be a time, I think later in the year, when we get more elections and we've got a lot more uncertainty around that, where the market probably could get volatile and choppy. But right now the times are good, so enjoy it.
Yeah. And I'll say, just before we wrap it up, on the altcoin front, taking a look at the total 3 chart, I mean, this thing is still in a bull market. It's been lagging behind Bitcoin a little bit, but that's typically what it does. So I have no clue how high this alt market's going to go, but I've got some positions that are working and just sticking with it and letting these things work. So, all right, guys.
Awesome.
Well, thanks for watching today. This is a quick one. We just wanted to get this out while everybody's trying to figure out the ETF stuff. So I hope this is helpful. Make sure to subscribe to the new YouTube channel. I guess it's not that new anymore. I know a lot of people are listening on the audio podcast. So thanks for leaving us a review. Share it up with anybody you think could get value from it. And again, go to wetalkmoney.com/community if you want to get in our Discord and our live classes and see what we're doing. And have a great week. Stay safe out there, and we will see you next time. Take care, guys.